Good morning. Welcome to Market Monday for May 12th, 2025. A very happy Mother's Day to all you wonderful moms out there. Last week, the Fed held rates steady, citing a tug of war between stubborn inflation and a strong but perhaps weakening employment situation. Here's holding rates steady, this sideways moving line right here. Of course, zooming out, here's the first part of the current cutting cycle here. One of the fastest hiking cycles on record here. As a reminder, slow cutting cycles are preferred as we normally see fast cutting cycles. See right here, global financial crisis, and COVID right here. So while it feels like more cuts equal relief, perhaps it's not that simple. One thing higher rates do, though, is pay more interest. Money markets, treasuries, cash equivalents of all sorts. My goodness, federal interest payments are now totaling $1.11 trillion. It's funny, the 0.11 is just an afterthought, but 0.11 trillion is actually $110 billion per year. We can see how that exploded after COVID. And in fact, this 1.11 trillion in annual interest has now surpassed the federal defense budget of 1.1 trillion. While it's understandable to have a moral discomfort with our government paying so much interest, from a practical standpoint, that's money going directly into the accounts of anybody who has cash. You, companies, pensions. Companies can then use that money and hire more people, retain it as increased earnings, or, as we see here, buy back their own stock. The value of announced stock buybacks has reached more than $600 billion so far this year, surpassing the prior high of $598 billion in 2022. And how about those earnings I just mentioned? S&P 500 stock market earnings for the past 12 months are on pace to hit another record high in the first quarter, up 10.8% over the past year. So we've got interest flowing to individuals and companies, supporting buybacks and earnings. And this, the NASDAQ is almost eerily tracking its mid-1990s experience in terms of the bull run and occasional pullbacks. Orange is from the December 2022 bottom, and blue is starting in 1995. In the current cycle, the NASDAQ is up 73% compared to a very close 68% in 1995. What do they say about history? It may not repeat, but it tends to rhyme. And should the tariff tantrum correction be over, the S&P 500 stock market would have registered a 19% correction, just below the 20% many folks refer to as a bear market. This would be the 8th such correction from 15 to 20% since 1950. And we'll let you draw your own conclusion about what has historically happened 1, 3, 6, and 12 months out. And today we'll leave you with a state in this country, New Hampshire, can now officially invest up to 5% of its treasury in digital assets. And many more states have legislation pending. Have a great week.